Welcome back to another, I guess, podcast that we are putting on. My name is Jason Wood, and along with Lee Maddox and Michael Maddox, we are partners in a nationwide brokerage company.
So, Michael, you are working solely on the brokerage side. So you're helping doctors buy and sell their practices, and um, it seems to me like you're talking to the buyers all the time. I almost never talk to buyers. You're on the phone with them constantly. What do the buyers really want to know when they call you about the practice? Are they what do what do they want to know? Are they going to make enough money? Are there enough operatories? What are the questions you get mostly?
Yeah, number one is they want to know where the practice is. They want to know if it's a shopping center and an office building, if it has good signage, or is there foot traffic going by. And they want to know how many operatories there are, if they have the latest technology, if they have paperless charts or digital. Um, they want to know how much money they're going to be able to make there. They want to know the net income, and um, yeah, I recommend that they review the numbers and then let's get them in the practice, see if they like it, and if they like it, let's get them in front of the seller and let them have a doctor to doctor conversation.
Do you find that buyers are they focused on the clinical or kind of more just numbers at first?
But first, I think it's they want to see the numbers, then they want to see what the doctors are currently referring out. If they can
Oh, that's good.
capitalize on anything there, if the doctor's not doing any endo, maybe they could do some endo prep. If they're doing Invisalign, and then it comes down to, like I said before, location. For some reason, people really want to be in shopping centers with a big sign, or if they could put, their stuff in the windows to attract foot traffic. That's what I see a lot.
So you do a lot of valuations, correct?
Yes.
So when you are if I'm a buyer, I'm this concept of how are these valuations even created? So when you are securing the paperwork for a valuation, what are you asking the seller for?
Yeah, so we really look at their tax returns. You want to see the last 3 years of tax returns, profit and loss statements, W-2s, any 1099s from independent contractors. And then we want to know, if they're paying their family or their staff, how much travel they're doing. And kind of want to see where they're spending their money that's not actually being spent on the practice itself, if that makes sense, right?
Yeah. So I've been told this a lot, that doing valuations is more art than science, but there's a lot of science to what you're doing when you come up with a valuation, right? You've got all this paperwork, so now you have it all together, and now you have to come up with a value. What are some of the metrics that you look at? What are some of the things that cause a practice value to be higher or lower?
Yeah, so after reviewing the paperwork and putting in an Excel spreadsheet, we really comes down to that adjusted net income. So that's the net income plus all the add backs. And depending if your net income is high or low, it depends on the adjusted net, on the multiple of net that's going to be used. And with the multiple of net, after applying that, we really want to see the practice somewhere between 80 and 85%. And depending on the location of the practice, it might be a little bit higher, depending on the location and what kind of procedures they're doing, what the technology is, and yeah.
So the 80 to 85%. Oftentimes I tell buyers, I go, just know that's what we call a rule of thumb. That it's not, a practice with 50% overhead and a practice with 80% overhead isn't worth the same. But a lot of brokers, they just say, well, it should be X percent of collections, and that's what it is. Obviously, that doesn't make sense when you have different profitability numbers. So when you are viewing a practice in, say, I don't know, Orange County, California, versus a practice in Nowheresville, Kansas, is the value the same if the profit's the same?
Yeah, and there's areas where we're going to see a lot more buyers for the practices, right? So you can tell all the young people coming out of school that they're going to make more money in the urban areas
Right.
because the cost of rent and the cost of employees is going to be lower, but they all want to go to the big cities, and the big cities are higher. So it's going to be the urban practices. Some of them are going to be priced lower.
You mean
And
rural part?
the rural practice,
Yeah.
yeah, sorry, the rural practices are going to be
Yeah.
priced lower, and that's just because there's fewer buyers. So it's just market pressure,
Right.
and we don't always know that, right? There's so many variables that we've looked at that have impacted the value that we've missed. I mean, smack yourself on the forehead because you think you know so much, and then every day you ask a question you don't have the answer to. That's one of them. And recently, we did a valuation on the practice, and the practice doesn't have an elevator, and it's PPO practice. So how's that impacted the buyers that you've talked to? I mean, it's been very difficult to sell, right? I mean, what are you hearing from those buyers?
Yeah, they want an elevator. They're worried about it. It really stifles what they can do in the practice if they want to do sedation or, be able to expand on what's happening there. And they're worried that they're not going to be ADA compliant and all these things, what in their view to be successful there.
Yeah,
Interesting.
So we're always finding out things after the fact. So getting back to where you started, Michael's very clear on asking for information. Getting
Right.
the information is very difficult. There are certain doctors that have it together, and they have all the information ready. Sometimes the spouses work in the practice, male or female, they have all the information. And there's just a lot of times where the doctors, they're just artists and scientists. They don't like numbers, they don't like paper, they don't like dealing with their tax issues, and literally trying to get the information is like pulling teeth. So once the information is accumulated, and Michael goes through and pulls up the spreadsheet, there's always a lot of questions that we need answers. There's what are the typical things that we need answers to that we don't see right off the tax returns that we don't understand.
A lot of time the insurance number on the tax return is huge. And so we need to break out, is this for your employees? Is this for yourself? Is this disability? Is this life? Is your family on here? And so we need to figure out what's actually theirs, What else do we have on there that we have questions about?
I think you mentioned
Pension
it.
a lot. Is the pension just for the doctor or the staff?
Yeah, you said it before, spousal compensation,
Or
kid
rent if they
compensation.
own the building.
Yeah,
Rent.
rent.
Yeah, that's always the hard part for us.
Yeah, if the wife works at the front desk, what's going to happen if they sell? Is she going to leave with the practice? Or,
Right.
Just a spouse, right? Wife or husband.
Yeah.
So it's always one of those things that the doctor retires and then the spouse stays back, or the significant other stays back and keeps working. There's a little bit of resentment there.
Yeah.
But getting back to your question that you asked Michael earlier, is that the percentages are not the same. There are certain areas that we consider hot markets in the U.S. where the practices are selling at really high multiples, and there's areas in the practice where you can't give the practice away, and the practice values are dropping down. And I think, while everybody thinks they know the market, fair market value is what what a willing seller will sell for and a willing buyer will pay when there's no duress, right? So we don't really understand market until market gets set. And so some of these valuations, we do our best to come up with what we think is the value of the practice based on our experience and knowledge. And remember, there's no comparative model out there, right? It's not like selling a home
Right.
where there's 10 houses on the street with the same floor plan. So we're looking at a lot of different things, and you use different models in your evaluation to come up, but asset accumulation.
Gross collections and multiple of net.
Yeah, so we're trying to use different things. We don't use capitalization of earnings, which is a very normally
Subjective.
used evaluation methodology. It just doesn't work
Right.
in areas where there's high overhead.
Well,
So-
what I've noticed is that there are brokers that are using cap rates, but there are also brokers that are using comparables, and there's not enough data.
Yeah.
And have you noticed that is that a trend that's evolving, or are there less brokers that are doing that? Because as I've seen it nationally, I'm always surprised by the amount of people that are trying to use comparables without the actual underpinning to those comparables.
Yeah, and I think that's data collection, right? So we do it here as
Yeah.
well. We will track when we value a practice to a zip code, and we'll understand what we valued it at. We understand what we sold it at. And then if we have another practice come up in the same zip code, then we'll look at that, right? It's not dispositive that this is what it's going to be, but it helps us start with the range.
Mm-hmm.
And I think you hit it earlier. Yeah, we may have a practice where the net income is phenomenal, and the seller will actually be punished because the banks won't fund 150%.
Right.
But if we went on a classic multiple of earnings, they would get that. So, for example, if the practice is doing $2 million and it's got 50% earnings, if we put it at 2.5 times multiple, yeah, we'd be at 2.5 million, and the bank may only want to fund to 100% or 80% or 90%. So sometimes we see that. So I would say that it's totally subjective, and I think if you've got 10 valuation people together looking at the same practices, you would really have a difficult time having 10 of them come up with the same number. And the other thing I think that's interesting is Michael was talking about what we call add backs. That's
Right.
where you take the net income and add things back. And what we find is the banks don't always agree with us, right? I mean, how many times are you having to talk with the banks and try to explain where we get the net, and they're just disagreeing with us?
All the time.
And we see a lot with the DSOs, there's a big difference on EBITDA, right? So when we're doing simple valuations, we're using seller's discretionary earnings, where we're just adding back the net income. When we're doing complex transactions, multiple practice transactions, we're using an EBITDA model, earnings before interest, taxes, and depreciation. And the CPA will have an EBITDA number, we'll have an EBITDA number that's different. 4 different DSOs will have a different EBITDA. So EBITDA should be the same for everybody, but doesn't have a tendency to be that. And I think it really frustrates you when you're doing the EBITDA calculation that everybody comes up with a different number.
Well, I've noticed that like depreciation, some people are using straight lines, some people are using, they front load. I've noticed that.
You're talking on asset value.
Correct. Yeah. And how they factor that back in or not. But one of the questions that I had, what about pay or mix? Like fee for service versus PPO versus, how does that come into valuations? Because I believe a lot of buyers, they either have preconceptions about a type of practice. Like for me, I view fee for service practices as actually being risky, and you really need to analyze the personality and the matrix of the seller. But I also find that a lot of buyers want fee for service. So does that come into play on your valuations?
Not as much, but what we see is the buyers, they're concerned about fee for service. They don't know if they'll be able to go in and charge the same amount as the seller because they're worried the patients won't like them or trust them right off the bat. Right. What do you think, Lee?
Yeah, I mean, I think we're trying to set maximum value based on the analytics, and then the market will set the price, and there's going to be some variables that come up that we may not have caught in our evaluation, like the elevator, for example. And recently with an HMO practice where there's very low cap rate, but there's a large number of patients, how do you quantify that? So we may have valued it based at X, thinking, that the impact of the HMO or Medi-Cal wasn't a big deal. And now we're finding out that it's going to be X minus something, and we don't know what that minus something is. And I don't think anybody really has the crystal ball to know what that is. And certainly, not talking for the rest of the country, but what's going on in California, they rolled back Prop 56, so they're not paying the Medi-Cal surcharge, and then they're also no longer going to give Medi-Cal to illegal aliens. That's both happening in June and July. So some people feel like adult Medi-Cal is going away, because when you take away the 30% surcharge, that makes it not profitable to do the Medi-Cal work. So how do you now value a Medi-Cal practice if, the Medi-Cal reimbursements are going to go down? And so it's kind of like when Delta came in to the specialist and sent everybody a letter and said, we're going to pay you $200,000 less next year. Until you actually see the impact on the practice, you can't bake that into the numbers. So the valuation is we're looking at historical information and trying to make a prediction on what the value is for a person going forward. And so I think Michael's heard this so many times. People want us to value it based on potential, right? And how many people have told you there's great potential? I got 5 chairs, or I'd only work 3 days. And buyers don't pay for potential. They
Right.
want to keep all the potential. They don't want to pay the seller and then go out and earn it. So that's interesting. And I think, don't you find it difficult to explain the add backs to most buyers? And I mean, how do we do a better job to make them understand what we're trying to communicate?
It's a great question. I mean, it's some buyers understand it, some don't. It's it's just I don't really know yet. I don't have that answer for you.
You don't have the answer because the buyers are still confused after you explain it to them.
Yeah, exactly.
Yeah.
It's like, hey, you guys operate this practice just like this guy or this seller does. This is how much you can expect to make.
Right.
If you don't add in the travel and your car and everything like that. But if you want to pay for your car and traveling and your spouse, and this is what you're going to make. So it depends how much you want to run through your business, and then you talk to your CPA, your tax specialist, and figure out a good strategy. Right?
Yeah, I see a lot of buyers like, well, but it's not in my pocket. No, but you still receive the benefit. You went on the trip. You went, you got that car. You did that. That is still a benefit. You may not see it in your bank account, but it's still a benefit.
But even the sellers will say that too.
Right.
If you ask the seller, how much do you make a year?
Yes.
They'll say, well, I pay myself $120,000.
Right.
And then you say, yeah, but how much do you run through the practice? And we hear it all the time where they say, oh, we don't run very much through. And then we actually go through the numbers, and you got cell phones, you got computers, you got car, you got Costco. All these things are being ran through, and maybe the sellers are making $180,000. So it's really interesting to go through the process. And actually, I like to tell most of my sellers, it's very valuable to have a valuation done because it's going to give you a snapshot of where your practice is and really refocus you. Because you may have the impression that your practice is worth $1 million. I think it's worth 800. Or maybe I think your practice is worth, you think your practice is worth 800 and I think it's worth $1 million. It could go both ways. So getting back to the valuation and just to segue out a little bit here for a minute, I think every doctor should have a practice valuation. And I don't think it's an age thing. So in my law practice, I deal with 5 to 10 doctors every month that are dying or becoming disabled. And if they
Every month?
Every month, especially now because I'm older than you, so a lot of my classmates are my age, 65. We're coming up to our 40th year anniversary, so we're losing some people from our class. But I also see people in their 40s. They're having ski accidents or bike accidents or car accidents, and so the value of the valuation or opinion of value is to number one, gather the information. And Michael knows how hard it is to get the information. If you think it's hard for us to get the information when the doctors are motivated to sell, imagine a spouse who's grieving, who's trying to figure out what the husband's doing. Because it's not just giving us the tax returns in the P&Ls, it's telling us what they mean. Like Michael said, with the insurance, how do we break the insurance down? What does that other expenses mean? What does outside labor mean? What are these other things here that they're on the P&L, but they're not on the tax return. They're on the tax return. They're not on the P&L. How do we understand that? And so if we can go through that when the doctor is alive and put together a valuation and then let them give it to their pension administrator, to their CPA and their wife, have some medical directives and have some direction in there. If I die, call this CPA, call this lawyer, call this broker. Then it will really help them because what have you seen if a doctor dies? What's the practice worth in 90 days?
Nothing.
Yeah, not a lot, right? So I think every doctor should get a valuation, and then especially the older doctor should consider getting it done every year or every other year to update it to make sure that you have an understanding where the practice is.
Well, you've also established a historical, I'll call it an infrastructure of expenses. And this is what I was doing in 2018, and you'll see how they did it in terms of the valuation. So here are the add backs. So you can use this from 2018, which I then got another one in 2020, and I got another one in 2022, and you can see the historical expenses, the add backs, all of that. So then even if I do pass away and we have this year of a P&L and you don't understand, you can cross-reference to see I was probably doing the same thing. I have a hot topic, and I guess you don't have to answer this, but we live in a very diverse area. How do you deal with a practice that is a singular ethnicity, singular non-English speaking population, or a single non-dominant religion as a patient base? How do you deal with that in valuations? Or is it just not talked about?
Yeah, we're not discounting. So to me, the value of the practice is the value of the practice. And then we have to find the buyer that fits the practice. So for example, Irvine, California, we needed to find a Chinese speaking doctor who spoke Mandarin, and we did, but we didn't discount the value of the practice. We currently have a practice for sale in San Diego that has 60% of the patient population that speaks Chinese. And so we have to try to find a buyer for that. It doesn't make sense to me to discount it and bring somebody in who doesn't speak Chinese, because they still may lose 60% of the people. So we just value it its value, and then we have to find people that fit in it. Now, you're right. People may make a decision to discount their practice to sell it at some point. That's not my decision as a valuation person. My valuation is, like Michael says, we go through it. We're trying to understand what the accountant did. And remember that the accountant's reacting to what's been presented by the client. So if the client's presenting information, sometimes the clients are using QuickBooks. We see that all the time. They're doing their own QuickBooks, or sometimes we see P&Ls done by CPAs. There are many times where Michael's asked to tell the doctors, we need a CPA generated P&L, and then they go back to their CPAs and they want to charge money, and they get mad at Michael saying, well, I've never had to do this before. Well, you didn't sell your practice before,
right? And
your P&L is not coherent, right? So the point is that, getting this information and understanding it is the value. And then going back to a death situation or disability situation, when we got to try to turn the practice quickly, if we have the historical information, we're just doing one more year, but we already know where the doctor's been hiding all the revenue. We can uncouple that and bring it back into the document, and then do our multiples and come out with a reasonable valuation. Now, we may discount on that level. Like, if somebody died, we may have a value. We'll advise people of the values, but then we'll also say you can expect something lower, right? And the longer the time has been since the doctor died, or has the
power to, if they have power, if they have it in a trust, if they have it something where the spouse can immediately respond and get an associate in, that's going to protect a lot more than if they have to go to probate.
And so that's a whole nother topic, right? And so you're right. When someone calls us and says somebody deceased, the first question we have is it in a trust? Because if it's not in a trust, then it maybe has to go to probate, or we have to go in and get emergency powers to sell the practice. Even that takes time. So yeah, and we have been involved with situations where we just couldn't sell the practice, either because it's going through probate, or it was closed down, or maybe they didn't bring an associate in. But if there's no revenue, nobody's going to pay. But really the key is, the slower we get the information, any broker, the slower the practice gets sold. And so having a practice valuation done just for transition estate purposes makes a lot of sense. And then of course, if you're actually in the business, in the process of trying to sell your business, it's essential. And so I think Michael said it earlier. It's that it's not taught in the dental schools how to read a P&L. It's not taught in dental schools how to read a tax return. And it doesn't make a lot of sense to people that P&Ls and tax returns don't often match. So what's happening when someone buys a practice is we're trying to match tax returns, P&L, production and collection reports, and bank account information. And I think empirically think that everything should be the same. Like if my tax return says $1 million collections, my P&L should say I made $1 million. The production and collection reports say I made $1 million, and I deposit $1 million in the bank account, and it's just never that way, and so that makes it harder for the valuation people to really come up with a really absolute true number that everybody would agree on, and that's why there's this difference between everybody who does the valuations. So I feel Michael's pain. I hear him on the phone a lot trying to explain this to the doctors, and ultimately Michael will refer them to consultants and CPAs to give them advice.
And the importance of that CPA generated P&L, it's for the valuation, but the lenders need it. If you find a buyer and you have something you did yourself, we're going to send it to the lenders, and they're going to be like, "What is this? This doesn't make sense." So it just stalls the deal, and then it breeds uncertainty into the deal, and the buyer might be like, "Well, what's the seller hiding?" And our answer is, we don't think they're hiding anything. We just need a proper P&L for you.
So working with a broker that is not reactive but proactive, that they're anticipating these things so that they're presenting as clean of an image as possible of the seller, is going to help the deal. Not only just help the deal close, but help the deal probably get a higher purchase price because there's less questions because everything's laid out.
Right. Yeah. If you get everything you need up front, everyone feels more confident, I think, instead of having to go back and forth 4 or 5 times.
Right.
This P&L is dirty, or it's not clean enough, or what does this even mean, right? So
yeah, let's talk about that a bit, because I've worked with other brokers who have outside companies do their practice valuations.
Oh, geez Louise.
And then when I challenge them on the practice valuation, they don't know anything about the practice. Like, they've not really looked at the tax return. They haven't really looked at the P&L. They don't really understand the valuation that was done for them. And they really can't articulate very well what's going on a financial level with the practice. I really think it's important that when you work with a broker, that they're doing the practice valuations or hiring people that they're working closely with, but at least being able to explain it and maybe put their eyes on the financials a little bit. And I just, again, having, ran a bigger brokerage company, I know that I did all the practice valuations. My team really didn't know much about the numbers other than what I communicated to them, and I was very careful in what I communicated. But I think it's really important that when you're working with a broker, they really understand your financials, and that may be the first time you understand the financials as a seller, because again, if you're just presenting information to the accountant, and the accountant is regurgitating what you've given to them in a P&L and give you back in the tax return, then it may not be accurate. And I think Michael and I find that all the time. How many times have you asked a seller, "What is this for?" And the answer is,
I don't know.
I don't know.
It's outside services.
It's I call the accountant, and then you call the accountant, and the accountant says, "They gave me the numbers."
Yeah. It was an ask my accountant thing, and so I put it down. Which, by the way, just for any IRS agents listening, we destroy all records. We actually are really bad record keepers, and we just recently had a fire. So
everything gets redacted as well, and the original copy gets deleted.
Yeah.
So
okay. I think that's important, Michael. I mean, what do we do to protect?
Yeah, when
sellers?
we get your information, as soon as we get it in, we scrub all the sensitive information. Your social security, your MPI number, everything that make you feel uncomfortable, and we redact
driver's
it.
License.
Yeah, driver's license.
Social
On W-2s,
Security.
we get rid of the last names of employees. We make sure everything is super clean so that there's no issues.
The amount of brokers that I've seen not do that is astounding.
Well, we're also part of a law office too, so this guy over here makes us follow the rules.
Interesting. Okay.
Yeah. So we really take care of all your information, and then, if we are going to share financials, it's in a Dropbox where we allow somebody access to that Dropbox. We invite them to the Dropbox, and we know who's looking at it.
So not only are you scrubbing the information, you're then providing a secondary security system to further protect that information that's out on the cloud.
Yeah, and along with that, we have 2 NDAs we have buyers sign. We explain why we have that, and, just make sure that they keep everything to themselves and not send it out to everybody in town.
If you have any other questions, feel free to click the link below, and hopefully we can assist you in that process.